Right. So in the short term, like when we were talking about a couple minutes ago about, how to kind of gauge leverage in the system, one of the things I mentioned was looking at the coin margined open interest. So if you look at a platform like Coinalyze is a great one. You can look at side by side the stable coin or USD margined contracts or open interest measured against the actual coin margined. And so what this is doing is this is just looking at what's the percentage of all of the open interest that's specifically just coin margined. And so yeah, like these short term spikes can be a bit of a red flag when you pair it with some of the other things. I'm not going to rehash the whole thing, but what we mentioned 5 minutes ago, in terms of like, okay, are we like building up a little dislocation of leverage in the system? Maybe we get a flush out, right? But what I'm really trying to paint a picture here was just the broader picture is that overall we have way less crypto margined futures contracts compared to what we did, earlier this year. I suspect as as we move past all-time highs, you'll start to see this increase because people are more bullish on Bitcoin and other crypto assets that they're going to be margining these futures contracts with. But we're in a good spot right now because it's showing you there's less convexity to the downside, right? So if we have like a large liquidation cascade, like we did, on May 13th, what happened was we had such a large amount of coin margin contracts that as and I mentioned this like 2 weeks ago. I know Dylan mentioned it last week, but I really think it's important for people to understand in terms of like how this affects market structure. That in May, all these people were they were collateralized with crypto. So as their P&L was decreasing, their margin was decreasing as well, and so it creates people are more susceptible to being squeezed to the downside. So longs are more susceptible to be getting squeezed. And when you have low percentage of contracts that are margined with crypto, AKA a larger percentage that are margined with stable coins or USD, that means that these traders on the short side are more susceptible to getting squeezed to the upside, or short squeezes are more likely because when you're collateralized with Bitcoin, you basically have this like inadvertent hedge, right? So let's say you're short, Bitcoin price starts going up. Well, your P&L is going down because the trade's going against, your betting price is going down and it's going up, but also your collateral is actually increasing because Bitcoin's price is increasing. So you kind of had this little hedge, right? But if you're collateralized with stable coins, then you don't have that. And so it's just more favorable market conditions for the bulls.